Hey there, I'm Kara Janowski with Sonder Accounting. In this video, I'm going to be discussing a few of the ways that we optimize the accounting structure for our hemp clients. This allows them to see a clearer picture of their financial health and understand whether or not they are on track to their goals and some of the adjustments that they might be able to make in order to be more effective and efficient in reaching their goals. The information in this video is based off of a completely fictional sample company file called Rubber Ducky CBD. This is a company that is selling a few different product lines. They do have a tincture, a topical line, and a capsule line, each with a few different products within. So without any further ado, let's dive in. I've opened up the financial statement, the profit and loss for January through June 2020 here in the QuickBooks file for our Rubber Ducky CBD. So we can see that there are three different products here. Now this is the first thing that we do differently from many accountants and CPAs who do this work. Many times they'll just have a basic product sales line and they're not tracking the information based on the product line level or even the item level. And you might say, well, I already have that in the e-commerce accounts. My WooCommerce or my Shopify, if you're still on Shopify, they are showing me that data, so I don't know why I need it in my accounting. And the answer is that the reason this is so valuable is because it ties in the big picture of your financials with your product lines. So for example, if you run a marketing campaign targeted at your tinctures, you want to be able to see where, when, and how that affected your revenue, along the lines of when the monies were spent on the advertising campaign. Further, we're often able to track this at the product level. So if I expand the capsules, we can actually see the 4 different capsules line that they have within their product sets. Same for tinctures. Of course, they produce a couple of different flavored tinctures and a couple of different milligram dosages. We're able to track that on a per product basis and understand which products are performing the best and when. Similarly, we're doing the same with the cost of goods. Many accountants are just tracking this as a basic cost of goods line, but we feel that it's important for you to understand where your cost of goods are truly being allocated. Are your tinctures more expensive to produce than your topicals or vice versa? Now, you also should be calculating that based on the gross margin in selling your products. But again, your accounting structure should be a full source, an all source, comprehensive data, so that when you come here, you're able to see the entire picture and make effective decisions. So let's dive into the expenses section. The first thing that we do is we divide this into 2 high-level categories, sometimes 3. General and administrative is the first one, sales and marketing the next, and followed by the third often is payroll and related labor expenses. Now, the reason that we break it out into these 2 account types is conceptually, you need to understand where the sales and marketing expenditures are going in your business and when that is effective or not. So for example, if you decide to generate a marketing campaign targeted towards your tinctures, you want to understand the related expenses that are going to be associated with that, such as web hosting, such as graphic design, and also see when that translates to sales results. So including all of this descriptive data in the accounting allows you to see a greater degree of visibility and start to see your business as the big picture molecule that it is. So you can see that we are dividing it down by the different advertising methods that are out there. We're also dividing it into other forms of marketing, right? So you have your sales and marketing contractors, etc. We put a lot more detail into the accounting than we often see when clients come to us. And finally, let's dive in and let's start talking about the monthly financial review videos that we do. This is where we not only will look at the year to date, but we also will break down the data by time period and assess whether or not goals are on par. So we've broken down the profit and loss by month. Now, for total product sales, we've generated the 66,000 for the year. But if you look at each individual month, you can clearly see some patterns, and there are 3 very strong months with April, January, and June, followed by 3 consistently lower months. Now, one of the things we help our clients do is understand what is making these months more successful. Sometimes that's particular campaigns in the marketing department. Sometimes that's related to a holiday that we might experience in our industry, 420, right? Depending on your target market, you may be running sales around that. And you may see an organic or natural bump in sales due to certain holidays. So we interpret the sales data during our monthly financial reviews videos. We help them to pinpoint these bumps and falls and understand whether or not they're repeatable. And finally, we're going to run period comparison reports, where we look to reflect on the growth from one period to the next and understand whether or not the business is overall moving towards its goals. So the first thing that we can see is that this business has generated a 29% increase in revenue from Q1 to Q2. That is significant, and it's very interesting to look at whether or not that has been consistent quarter over quarter since the business began. So normally that's something that we would look at with our CFO level clients. Now, while the overall revenue growth has grown by 29%, we can see that that includes a 23% growth in product sales, with the majority comes specifically from tinctures. So there's something about the way that they are marketing tinctures or the consumer demand in their target market for tinctures that's leading to the growth in that segment. We also compare the total income with the net profit. So if we go down to the bottom of the statement, we see that their net income only changed by 8% from one quarter to the next, while their revenue grew from over 20%. Now, this company is clearly operating as a loss. Perhaps they're invested, or they are otherwise just working towards a positive, a net positive end of the year. Some companies will hit a certain point in the year that they turn positive, hence Black Friday, right? Other clients are going to be profitable month over month. It definitely depends on the business model. But it is curious that the revenue grew by the 20+% and net profit only by the 8%. And we would dive deeper into the financials to understand where that difference comes from. So for example, this company has their cost of goods largely occurring in Q2. And that's because they are not using accrual-based inventory accounting. So that definitely explains a significant part of the reason why their profit doesn't translate necessarily from their revenue increase. They have 31% more cost of goods being purchased in Q2 than were purchased in Q1, right? Now further, we can look down here and we can actually see that the general and administrative expenses decreased in Q2, as did the sales and marketing expenses. So therefore, the entirety of our difference there does come from the cost of goods sold. So I hope this video gave you some insight into the way that we use our clients' financial data to help them understand the effectiveness of their decision making and whether or not they're on the right track to meet their goals. If you have any questions, send me an email and we'll talk soon. Bye-bye.